focus has to be on commodities, though. And joining us now, none other than Jim Rogers, needs no introduction to those who track the international commodity markets. Jim Rogers, thank you so much for taking out the time and speaking to us. What are you making of the current situation? A little panic in Yemen, and we've seen oil going all over the place. In your view, where are crude prices really headed, and the fundamentals versus the speculative angle at this point, Jim?
Oh, I don't know. You should watch Bloomberg TV if you want to find out where oil prices are going. You know, oil prices it's a political game right now. America and Saudi Arabia are trying to put Iran and Russia in their place. So Saudi Arabia is dumping oil in order to help with the political negotiations. So I don't really know. The last time we had an oil collapse, it went down to the low 30s. I don't think it's going there again, but it could if America and Saudi Arabia try to put more pressure on Iran.
I want to get your sense on the fundamentals of what's happening between the commodities versus the dollar movement as well, because with all the Fed rate hike fears coming in, Jim, there has been a big concern of the mega dollar rally that we're seeing. What's your own sense of the greenback?
Well, I own U.S. dollars. I own U.S. dollars more than any other currency at the moment. I own them because there's going to be more turmoil in the financial markets in the next year or two. And when there's turmoil, many people flee to the U.S. dollar because they think it's a safe haven. It is not a safe haven, but people go there because there's not many other places to go. That's why I own U.S. dollars. U.S. dollars could actually turn into a bubble when we get real turmoil. You know, if we have stock market collapses in the next couple of years, many people will flee to the U.S. dollar, and it'll be a bubble. At that point, I'll have to sell my U.S. dollars, and I have no idea what I will do with the money then.
At what level would you consider it a bubble, Jim? I ask you this question because we've been to that 100 mark. We've seen much higher levels than that in the last 2 decades. At what point would you start calling the dollar rally a bubble?
Well, this is not a bubble yet. It's expensive, and it's gone up a lot, and it's gone up dramatically, but it's not a bubble yet. I don't know, 120, 125. You would have to tell me what's going on in the world. If there's war, who knows how high it could go. But you can tell it's a bubble when you see people on Bloomberg begging to buy dollars when they say there's no other place to put your money except dollars, and they were pleading to sell everything, that Japanese yen, euros, rupees, when they're selling everything except U.S. dollars, then you'll know it's a bubble. It's not a bubble yet.
Can it go to 120, Jim, with the Fed rate hike on the anvil? What is your own sense of what Ms. Yellen is likely to do this year?
Well, it certainly can go to 120. I'm not predicting that it will. You ask how high it could go. Well, it could go that high. And if war breaks out, who knows how high it could go. Mrs. Yellen is going to raise interest rates, or the market is going to raise interest rates. Rates are going to go higher. And when that happens, the Japanese are not going to raise rates. The Europeans are not going to raise rates. So the dollar could go much, much, much higher. As I said, it's my largest position.
What would you do with the crude at this point? What would you be advised to investors out there? A large part of the early drop, many people said, was merely speculative. Now we've got geopolitical tensions as well coming in, Jim. What would you advise for crude oil at this point?
Well, I am not selling my crude oil, but again, I'm a very bad market timer. I'm very bad at short-term trading. You know, the fundamentals are that the world has been using more oil than it has been consuming for the past several years, except for fracking. If you take fracking out, then world reserves are continuing to decline. That's going to happen especially now because many of the frackers are going to go bankrupt. They borrowed a lot of money. Most of them had negative cash flow. They just kept borrowing to keep going. So the fundamentals are not great for oil, but Saudi Arabia is dumping oil right now for political reasons.
What about gold, Jim? You know, you've been bullish on gold for a while. We haven't seen a massive correction in gold, one would argue. Would you buy gold at these levels, or do you think there is more downside, especially with the geopolitical tensions rising and the Fed rate hike on the anvil? What would be your recommendation for an investor into gold?
Well, I own gold, but I have not been bullish on. I've been telling people for 4 years that gold will go lower. So yes, I own gold, and I haven't sold any gold. I'm waiting. I expect another chance to buy gold in the next year or two. If it goes down a lot, if the people start dumping, then I have every plan to buy more gold. You know, gold has not had a 50% correction in many, many years. That's not normal. So if gold goes down 50%, which would be under 1,000, that's not a prediction. I'm just saying if it happens, which would be normal, then I will buy a lot more gold. But I am not buying gold now and have not been buying for several years.
Jim, you're an avid traveler as well. We here in the emerging markets are bystanders and watchers of what's happening in the developing world. Should we be concerned with the kind of movements we're seeing in global currency and commodity markets? Is this a making of a perfect storm for emerging markets?
Oh, yes, we're going to have serious problems. American stock market's been going up almost straight up for 6 years. That's very unusual. At the same time, debt has been going higher and higher and higher all over the world, and central banks have been printing a lot of money. That is not normal. When this ends, it's going to be much worse than the last time we had a big collapse in the financial markets. It's going to be much, much worse. So, yeah, we all should be concerned. We're getting some signals now in the emerging markets, markets which borrowed a lot of money. No, it's going to be a mess the next time we have a financial crisis. And we will have financial crises. We've been having them since the beginning of time. If anybody tells you there are no more financial crises, run the other way.
Most definitely. Jim, what about India? You know, we've had a new political mandate. The wave of sentiment and confidence has really made us soar through 2014. 2015 is turning out to be a tad tougher. What's your own sense of India at this point?
Well, speaking of central banks, you have one of the best central bankers in the world right now. I wish he were running the American central bank. I wish he were running a lot of central banks. He at least understands how it's supposed to work and what's supposed to happen. I own shares in India for the first time in a long time, partly because of your central banker and partly because of the new prime minister. The new prime minister hasn't produced much yet, but I hope he will, because if he doesn't produce soon, everybody's going to give up, including me, because he's got to come up with some real solutions instead of just a lot of talk. But I admire your central banker very much.
What would make you invest more in India, Jim? Let me put that, because a lot of people have been talking about the reform talk, but not really translating on the ground. What would it take for a veteran investor like you to raise his exposure to India?
Well, one thing would make, if they made the currency convertible and if they made it easy for foreigners to buy shares in India, if you made your markets open and you made your currency convertible, I would buy a lot of India right away. I'm afraid they're not going to do that yet, although they should. This is 2015. I don't know why they're worried anymore. Or if the market went down for some reason. If the market went down for some reason, because markets around the world are having a correction, I would probably buy more India. But certainly if you made your markets open and convertible.
What do you like in India, Jim, if I could ask you that? What pockets are exciting you in India at this time on value?
Well, I'm not going to answer your question specifically, except to say that the easy way for me and for many other people is to and the index. And so I've mainly bought the index so far.
All right.